Hey everybody, Marty Mazur, good afternoon. 30th of June 2016. This is your second and presumably, um, assuming nothing too strange happens tomorrow, last video of the week. And I'll be a little early again this weekend. So sometime tomorrow or tomorrow night, you'll get your weekly update, your written blog post. Um, so I'm going to talk a little bit about this amazing 3-day rally we've had, give you some thoughts, and then have a little fun with this particular presentation with some statistics that I think, at least in my way of thinking, help kind of explain a little bit of the sentiment that has driven the last 3 days of trading. So what we have here, these two bars, this amazingly long bar, is just one day. That's last Friday, that 600-point decline in the S&P, or I'm sorry, in the Dow. But we're looking at the S&P. It was 75-point decline, some crazy number. Big follow-up on Monday. I did tell you already that the strange occurrence of the VIX being down at the same time was signaling that options traders were already backing away from this presumed crisis that so many people were talking about. And then sure enough, we got this big bounce, and I said, yeah, it might feel special, but don't count on it. And then it's looking special again for 3 days. So big movement to the upside. I mean, we are almost back to where we were the Thursday before the vote. Absolutely amazing. Now, I'm going to offer up a lot more in the coming few days and probably over the weekend, or at least tomorrow when you get that weekend update, on kind of the Brexit situation and kind of how I see it and so forth. I presume I'm going to offer up much more. There's more I want to talk about on the Brexit. Let's just put it that way. But let's talk about technicals just for a little bit, and then I want to get to the I think the emotion behind this move that we're seeing. So let me do again a retracement for you just to remind you. And this is what a technician, just a purely technical analyst might tell you, is that we had this nice rally that lost some steam, went through a normal retracement, stopped where we often do, right at the 38%. Bounced off of that and then moved higher. So a true, full-blooded technician would tell you, hey, this is about reaching that level and being bought. And so we'll see if we consolidate at a lower level at some point later. So we'll leave that one there. I have a couple of trend lines for you. So from a technical perspective, this lower high is not a good thing. This lower low is not a good thing. Now we are gaining again to the upside on some pretty good volume. The volume picture is better than the story I was telling here. So if we can get some momentum, we got to pierce this potential resistance here. You get above this blue line and you get to what has to be a higher high once you get above that, and we may see some momentum. We may finally come through that that all-time high with some force, and we'll see where it takes us from there. I know some technicians are actually saying they're not going to buy again until we see the market go through this all-time high with some good underlying support for it. So that may be in the cards. Okay, so how is it that, we had this we know that there was some optimism around Brexit. I've talked before about short covering. I think there was a lot of that last Thursday, and because they thought the Remain vote was going to win. And then we just got creamed. So a lot of those positions that came in here came out, and we maybe overdid a little to the downside, at least on near term. There's still a lot to come out of Europe, no doubt. And then bargain hunters came in. Suddenly the market found a bottom at that important technical resistance level or support level, and the shorts had to cover, and more money came in, and yada yada yada. Okay, so let's get into the weeds a little deeper, but not into the technical weeds. Let's just get into human psychology and personalities and so on, and understand that when it comes to investing, we tend to migrate between two kinds of fears. And you might say the fear of losing and the fear of losing out. I wrote about that here recently, but let me show you. A week ago today, the American Association of Individual Investors, this has to be the most followed sentiment indicator. And they asked their members, what do you think about the market 6 months from now? And as you can see, a week ago today, Bullishness was 22%. You can see the average was 38.5%. You can see that it was down from the previous week. About 2 or 3 weeks ago, that was all the way down to 17.5%, which is just amazingly low. Now let me show you a very interesting chart here. This tracks all the way back 30 years where the market tends to be on average a month, 3 months, 6 months, and 1 year after we have different levels of bullish sentiment via that survey. So as you can see, when sentiment was under 20, the market was up on average substantially. A year later, it was up, let's just call it 20%. When it's where it is now, between 20 and 30, you can see the market tends to do very, very well. I'd say that's about a 12% return on average over the ensuing year. So you can see that low levels of bullish sentiment have historically led to high returns in the stock market. Now, folks, don't take this one necessarily to the bank. It's just a fascinating thing to take a look at. And look what happens when sentiment is over 60%. When 6 out of 10 plus are saying they like being in the market, look, the green bar. The returns on average have been negative every period here, 1, 3, 6 months, and then 1 year later. So, why would that be? One might say that there's a lot of liquidity in the market, and I would agree. In fact, if you look at the most recent Merrill Lynch, Bank of America fund manager survey, this line right here would tell you where things would be if they were weighted where they typically are under normal circumstances, where fund managers tend to sit. Notice that in June, managers were anything above this line is overweight, historically speaking, cash. So a lot of cash, a lot of bonds, a real defensive posture among actively managed mutual funds. And look here at equities, a really, I would say, substantial underweighting in risk appetite and equities in general. So we had a situation where we have, again, sentiment very, very low among individuals, and also clearly sentiment low among mutual fund managers coming into this last Brexit vote. Now, here, when the market was really rallying going into it, I think people were believing the odds makers and believing what the market signals were and what all the experts were saying, that we would remain. And I think kind of feel that there was all this cash and all this bearishness, excuse me, and it could be that remain vote would push us to higher levels. Well, it didn't happen. Essentially, going into it, at least as we were a week or two out, this is kind of how people were feeling. As my little cartoon, we got people huddled together. This storm out here would be their perception of the market. When you're feeling this way, and that's what the surveys and the statistics were telling us, you're not going to be buying stocks. This is going to be happening, okay? And then to contrast, when one reason, or just to put a picture on what it feels like when people are above 60% in the market, I mean, they're partying hard, and we can call these days a low interest rate party bus. We'll talk a minute about the cliff that they're about to go off of. But the studies would suggest that this depicts pretty much what happens when everybody gets this bullish. So back to these levels of fear that I talked about. So here, clearly these folks, when bullishness is so low, they fear losing. Okay, in my own notes, as I write to myself about what I think the predominant sentiment is out there, I call this FOL. And then this, when people are feeling predominantly this way, it's FOLO or FOLO, fear of losing out. So nobody's going to be able to party hard forever. Something's going to happen. Somebody's going to look over the end of the bus here and see this cliff coming, and suddenly these people go from this massive fear of losing out and wanting to stay on that party bus to this intense fear of losing. So when you go from the party bus to this, the way you accommodate that fear is, or compensate for it, is you sell your stocks and you fill up this pot here. When, on the contrary, when the skies begin to clear and you realize that, wow, Great Britain isn't leaving the European Union for 2 years, and it would be in everybody's best interest if they could just get along and come up with a workable solution. Then suddenly the sky is clearing and they go somewhere between the fear of losing and the fear of losing out, or they go somewhere between, so far, the 22% to today's survey results, which is about 29%, which is about a 7% jump. And remember, the historical average is 38.5. So I can tell you historically, and I've written about this numerous times over the years, that I start feeling pretty good about the market, about the trajectory, when people are feeling pretty bad about the market, because I know it's human nature. We migrate between these two polarities. So when we go from the fear of losing, which we were pretty predominantly in here based on the surveys and the fund flows, to the fear of losing out, we're going to be buying stocks and pushing them higher. And so I think what happened is that fear got exacerbated, a little bit of sun started shining, and now we have suddenly some pretty impressive gains over a very short-term basis. So now I'm going to be looking for 2100 on the S&P. I had a staff member ask me what I think about the market, and I said, you know, from a technical perspective, 2100 has been such strong resistance. I mean, look at it going back to last fall. I mean, if there wasn't a ceiling right there, I don't know. If that's not a ceiling, I don't know what one is, because, yeah, we did live a little bit above it, but it just could not hold it. Once it came through, it penetrated, and so on and so forth. 2000, or that 38% retracement level, and that's it. So here we are, folks. We've got 2100 to the upside as resistance, 2000 to the downside as support. I think over the next few days and weeks, we're going to see one move, a big move, in one direction or the other. I just don't think we're going to live here forever. Right now, the Brexit, I think, in the minds of these people, one of the reasons they came in and got so optimistic and crazy about stocks is, one, a lot of them were short. They needed to get out of those positions, because when the market goes up on you and you're short, you're going to lose a lot of money. And two, suddenly the odds of a Fed rate increase just disappeared all of a sudden. Now, let me pierce that bubble just a little bit. We're going to get some jobs numbers next Friday, and my data says it's going to be a pretty good number. The Atlanta GDP now survey is running at about a 2.7 and 2.8 GDP for the second quarter, which is much, much better than the first quarter. The inflation numbers remain tame. The employment outlook remains pretty tight. So it would not surprise me, as we start moving into the second half of the year, before we get too deep into it and too close to the U.S. election, if suddenly the market begins worrying a bit about the Fed raising interest rates. But like I said yesterday in my interview, if the economy is really doing well and they raise interest rates against that, well, history shows that the market, at least through the beginning of the tightening cycle, can do pretty well in that environment too. So, folks, let me just leave it there. That was an unusually long one, but I thought I'd spice it up a little bit. And I'll do everything I can going forward to make this stuff as understandable as possible. A lot of you are now watching these videos, and I know it's because we've had all of this volatility. I'm going to try to make them a little more interesting so I can keep you watching, because I think this is important stuff, and I think it's all about having the right perspective so we can keep our wits about us and keep thinking long term. But when we understand the short term, we tend not to make short term decisions. Thank you, as always, folks, for watching and listening, and I'll talk to you very soon. Bye-bye.